What if I told you that you are given 1 lakh rupees and today you are given a challenge? Simply turn this 1 lakh into 1 crore. How though? Stock market, mutual funds, trading, crypto, or start a business? Or would you just get an FD? The interesting thing is that lakhs of people in India start investing every year. Everyone has the same dream to achieve financial freedom, to become a crorepati and then enjoy a fun life. However, only a very few people perform this simple calculation. Do you realize what it actually means to go from 1 lakh to 1 crore? You truly have to grow your money 100 times over. You need 100x growth. And this is the point where the majority of people make a mistake. Because when they feel that they need 100x return, their entire focus shifts away from the process towards shortcuts. This is why people buy penny stocks. They jump into F and O. They rely on Telegram tips, start chasing crypto, and then, after a few years, they realize that becoming a crorepati wasn't difficult. Taking the wrong path proved to be costly. In today's video, we won't talk about motivational things. We will look at actual numbers and actual examples. I will also explain in detail exactly how people can turn their 1 lakh into 1 crore. Believe me, you can achieve this goal too, and we will now carefully understand the 6 different practical methods to reach this goal and which route is the fastest, which one is the safest, and which route is suitable for the maximum number of people. It's possible that the first or second route might seem a bit common to you, but the upcoming routes are a little different. Watch the video until the end to understand. First, let us understand a concept. If you really want to turn 1 lakh into 1 crore, you need a 100x return. Now, let's say you're getting a 12% annual return. Then it will take about 40 years for 1 lakh to become 1 crore. If you get a 15% return, then this specific time will reduce to just 32 years. And if you get a 20% return, then you can turn 1 lakh into 1 crore in just 25 years. And if someone consistently manages to generate a 30% annual return, they can successfully turn 1 lakh into 1 crore in 18 years. This means that just a small difference in annual returns can quite drastically increase the speed of your wealth creation process. That's why today, we will judge each route based on 3 parameters. What is the return potential? What are the risks and time requirements? All 3. Let's begin. First up, method number 1. I know this method might seem a bit common to you. Do you know why? Because not just me. Everyone explains this to you. Mutual funds are right. Today, crores of investors in India are investing in mutual funds. However, the majority of people underestimate mutual funds. They think they will only get a 10 to 12% return from them. How will we become crorepatis with this? Well, let me ask you a question. If an asset is consistently giving you CAGR of 12 to 15% per annum, research professionals are working for you, you are getting proper diversification, plus you really do not even need to monitor the financial markets daily, then isn't it a powerful asset? The issue is not mutual funds, it is expectations. They want to be crorepatis in a year. Mutual funds make you a crorepati in 15 to 20 years. And that is precisely why most people lose their patience, withdraw money from mutual funds and reinvest into risky assets. Suppose an investor invested 1 lakh rupees and along with that, added a 10,000 rupee SIP. If we consider a long-term average annual return of 12 or 15%, even then, the effect of compounding becomes explosive over time. The biggest secret here isn't the return. The secret is duration. The more time you give, the more powerful compounding will be. Do you know the biggest mistake mutual fund investors make? They stop their SIP as soon as the market falls. The reality is that a market crash is actually just a big discount sale for SIP investors. When the market falls, you get more units. Units that cost 100 rupees before are now only 80. And those same units create wealth for you in the future. So, if you are a beginner, if you have a job, and you are unable to track the market every single day, then mutual funds remain the most practical and reliable starting point for your wealth creation journey. But it is not true that money can only be made in mutual funds alone. There are 5 other distinct methods where money can be made even faster than that. Method number 2, direct equity investing. Well, this is a wealth multiplication machine. While mutual funds act as a wealth creation machine, direct stocks function as a wealth multiplication machine. Here, you can get 12 times your returns instead of 12%. In the last 20 to 25 years, there have been businesses in India that have given unimaginable returns. Titan, Asian Paints, Bajaj Finance, Eicher Motors. You know all these stories. And there are many other companies that have made investors crorepatis. Some investors have definitely even seen lakhs turn into crores in these businesses. But there is a dangerous reality here too. Beyond multi-baggers, there are also 1,000 failed stocks. This clearly means making money in direct equity is possible, but having the right knowledge is truly mandatory. You'll have to understand the business. You'll have to understand financial statements. You'll have to evaluate the management, and you'll also have to understand industry trends. Now, if you possess that much time and you can understand equity analysis and perform thorough fundamental analysis, then go for it. If you really ask me exactly how to identify potential multi-bagger stocks, is there a basic filter? I'll give you 3 things. If these 3 things are right, then maybe that stock can become a multi-bagger in the future. First is sales growth, second is profit growth, and third is the debt level. If a company is consistently growing, its total debt is under control, and the management remains trustworthy, then the probability of long-term wealth creation increases. But let me tell you one more important point. Do not ever put all of your money into just one stock, because even the best investors can be wrong. Here, diversification and risk management are equally important. You must know that Mr. Rakesh Junjunwala lost money in stocks like DHFL and Yes Bank. But at the same time, he also made crores in profit from companies like Titan and Crystal. Direct equity investing is for those who are willing to give time to learning. The reward here can be bigger than mutual funds, but the risk is also just as high. Now, let us come to an asset that is widely considered a symbol of wealth creation in India. But first, let me give you a spoiler. This is truly Indians' absolute favorite asset. Look at any Indian family, be it a businessman, doctor, CA, NRI, or salaried employee. One asset is almost common among all of them. That is property, meaning real estate. And the reason for this is quite simple really. Real estate doesn't just give you appreciation, it also gives you leverage, plus rental income and also emotional security. When people say, I have my own house, it represents both investment and personal confidence. Today, if you marry, the girl asks, do you have your own house? But buying property has become a huge challenge for this generation. Because property prices have risen very rapidly. In Mumbai, the price of a 1 BHK flat is also around 2 crore. That's why the majority of people can't invest in real estate. Most can only afford a single home, and that is usually with a loan. But SEBI has actually allowed an interesting investment option, where you can invest for only 500 rupees, I repeat, with 500 rupees in India's top Tier 1 graded real estate properties, where you can invest. And the most important thing is, you can also earn a regular rental income every month. You see, there is actually no hassle of maintenance, and nor do you need to find a tenant. The money will keep coming directly into your account. The rental income will be directly credited to your bank account. This system is called REITs, which means Real Estate Investment Trust. To put it simply, just like a mutual fund is a basket of stocks. Similarly, REITs are basically a basket of commercial real estate, offices, business parks, commercial properties, etc. And an investor can become a fractional owner of it. This means you can get exposure to real estate even with a relatively smaller amount. In India, it starts at 500. Do you know the biggest advantage of real estate? It has the capacity to beat inflation. When inflation rises, real estate prices also rise. But do you know what the biggest challenge is? Liquidity. In the stock market, you can actually also sell REITs with a single click. Property takes many months. That's why it is a fact that real estate is considered a long-term wealth creation asset, but it's not good for liquidity. REITs are listed on the stock exchange. Today, the price is 500 rupees. If it increases tomorrow, you can sell it. Just like normal shares. And to be honest, I believe that their prices do not fall much. Why? Because behind them lies not some business, but actual real estate. It's an entire property whose value doesn't fall overnight. If you want to invest, then you must check out this video of mine. In it, I have done a detailed analysis of every listed REITs in India. I show each REIT's dividend yield and how much capital appreciation it's giving and which one is the best to invest in. I've covered everything. I have put the link to this video in the description. Do check it. Now let's move to the next category. This is a category that makes everyone genuinely excited when they first hear about it. But when they discover the actual reality, most people start running away from it. Method number 5 is trading, and most individuals believe that this is the fastest path to wealth, meaning you can get rich overnight. But listen to this. I am about to share an extremely uncomfortable truth here, so watch the entire rest of the video carefully. Look, trading is not easy. Social media has made trading seem glamorous. Traders constantly showcase their luxury cars, laptops, beaches, and screenshots of their profits. But clearly no one shows you the sleepless nights. No one shows the losses. They don't reveal the emotional pressure at all. The reality is that trading is a profession. And similar to every single profession, it requires skill. Today, to become a doctor, one must study for many years. Even to become an engineer, you have to study for years. But in trading, people bring in a capital of 50,000 and expect profits the very next day. This approach never works. In trading, the most important thing isn't strategy. It's risk management and psychological control, which 90% of people can't do. If you choose to take 10 trades and you are wrong 6 times, you will surely generate a loss. It's not a problem. If you keep your losses in control, then you can still be profitable with the remaining 4 profitable trades. But if, out of 10 trades, you are right 8 times and making a profit, but you have one big loss, your capital gets wiped. What I mean to say is, risk management is more important than your profit. That is precisely why successful traders focus not on returns, but on risk management instead. I have seen many traders who are financially successful even by generating an annual return of 30 to 40%. And there are many traders who make a return of 300%, but they wipe out their entire account in a single big loss. It is certainly possible to make crores from trading, but you have to treat trading like a real business. You simply cannot gamble with it at all. Otherwise, the market will take a fee from you and also teach you a lesson. It might even wipe out your capital. But still, if you want to earn passive income from trading, then you must watch this video of mine. In this video, I explained how daily passive income can be generated with the help of algo trading. I have also disclosed some high-performance algo trading strategies that have provided more than 100% return throughout the last year. And yes, this is not a fake number. It's back-tested data, and everything is approved. I have put the link in the description. Do check it. Now, let us come to my favorite method. Method number 6. If I had only 1 lakh rupees available in my pocket today, and I was guaranteed that I could choose just one single asset, I probably wouldn't choose stocks. Not mutual funds. I wouldn't choose property either, because you need crores of rupees to invest in property anyway. I would choose myself. Do you know why? Because the world's highest return asset simply isn't a stock. It's not a mutual fund, and it's not a bond either. Do you know where you get the highest return? In investing in yourself. The asset that will provide you with the highest return is always your own earning capacity. I'm talking about your skills. Imagine if you are earning 30,000 rupees per month. And by developing your skills, you start earning 1 lakh rupees per month, then what will happen? Your income will become 3 times. And this isn't just for 1 month. You'll keep earning this 3 times income for your entire life. Your investment capacity will effectively become 3 times greater, and your personal wealth creation speed will become 3 times faster. That is precisely why successful people first grow their income and then they expand their investments. Learn sales, learn communication, learn content creation. There's big money in content creation too. Master AI tools, digital marketing. Basically, learn whatever you are truly interested in. I personally pursued finance and then became a professional wealth manager. I made money. You could choose to learn negotiation, as this skill consistently generates lifetime dividends for you. The more of an expert you become, the more money you will be able to earn. And if you manage to combine these essential skills with business, then the absolute ceiling for wealth creation becomes practically unlimited. Today in India, there are many successful entrepreneurs who started with just 2 to 4 lakh rupees and have built businesses worth crores today. Because in business, there is simply no upper limit on returns. The risk is high, but the reward is also extraordinary. And that's why in my ranking, skill investing and business are placed at the very top. Because it actually fuels all of those other assets. So, the decision is yours. Invest money in all the other assets, but start with yourself. If you liked the video, please give it a like and subscribe to the channel for more interesting content.